Welcome to You Have Power Behind the Law with attorney Justin Clark. You Have Power is your opportunity to get answers to your legal questions. To be a part of today's program, call 407-916-674-1025 or toll free at 855-545-1025. The lines are now open. But now, here's your host, Orlando's drive time attorney, Justin Clark.
Hello, everybody. This is Tom Benson, normally doing the show with Justin, who is on the road or on assignment, whatever you want to say instead. But Rob is here, the guy who pushes the buttons and makes things happen.
I'm here. Let's get the show going.
And he answers the phone if you have any comments or questions for our guest tonight. The number to call would be 407-916-5400. That's 407-916-5400. And in the studio tonight, we have attorney Brandon Stewart, who has been on the show before. And we also have a tax consultant who works for Justin Clark and Associates, a guy by the name of Steve Richardson. Welcome both.
Hey. Welcome. Glad to be here.
Hey, Tom. Good to see you again.
Good to be here. Good to be anywhere. It's a Friday. Yeah, I've never heard of a bad Friday, you know?
Nope.
They're all good.
Oh, yeah.
So who's at the office if anybody has questions?
Oh, we got lawyers standing by right now as we speak. If you want to call the office, the number is 321-282-1055 for any legal question that you might have. Please feel free to call the office. We have lawyers standing by right now who can help you and assist you with your legal problems.
That's super. Well, what are we going to talk about tonight, guys? I kind of get the feeling it's going to be taxes and stuff like that.
Yeah, so I usually do the show with myself, and I'll talk about personal injury or landlord-tenant, but I thought tonight we'd change it up a little bit. We brought our tax accountant. You said consultant, but let's not cut Steve off there. He's an accountant.
Okay.
And he worked hard for that. So, so obviously we're going to talk about some IRS stuff and deal with what the IRS can do. And in my mind, I've always thought that the IRS they're like debt collectors, but they're on steroids.
Mm-hmm.
They're like the ultimate debt collector, and they have definitely some more power than any of your standard debt collectors would.
Yeah. If you get a letter or a phone call from the IRS,
yeah,
people get nervous right away.
You're going to want to call us right away.
Yeah.
And again, if you want to call the office, it's 321-282-1055. If you want to call the radio show, 407-916-5400, or toll free at 855-545-1025. And we're here right now to answer any legal questions that you may have. So, Tom, I looked at this interesting article the other day.
Okay.
It's on Business Insider.
Okay.
And titled 12 Terrible Things That Could Happen If You Don't Do Your Taxes.
Oh, boy.
So here we go.
All right.
You get a letter in the mail. Typically it's a certified letter. Mm-hmm. Do not ignore it, Steve. You probably agree with that one.
Mm-hmm.
The best thing is not to ignore that letter. But let's talk about 12 terrible things that could happen if you don't do your taxes. 1, you pay a penalty fee.
Yeah, sure.
Steve, what do you know about these penalty fees?
Well, they're going to definitely charge you with a penalty fee. Well, that's for not filing. You have either late filing penalty fee or for not filing penalty fee. So that'll be a failure to file, which is called the FPTA.
Oh, gosh. Nobody likes that.
But you could file for an extension and avoid that, right?
Of course, yes.
Yeah.
That's the beauty about it. If you file for extension ahead of time, before the end of the filing date, then you can avoid that filing fee if you still file within the amount of time the extension.
Now, are you talking about the one that everybody knows, which is April the 15th? Or are you talking about any deadline that comes up for anyone at any time, such as businessman on a quarterly basis?
April 15th. Well, that's with any you can file for the extension anytime.
Okay.
On any of them, but definitely your personal one is April 15th. Business is due in March 15th.
Got it.
All right. Second terrible thing that can happen to you if you don't file your taxes, you have to pay interest. Nobody likes to pay interest on anything.
Yeah.
Especially not on your taxes. And how is interest different than an actual penalty fee, Steve?
Well, the penalty fees, normally the penalty fees come for not filing. The interest is going to come anyway. If you file late, you are going to be access to interest. Now, the penalty fees, the difference between the interest and penalty fees, most times attorney or like myself, accountant, we can get by with at least getting rid of the penalty fees for the first time abatement, what it's called. But as far as the interest, there's no way taking away the interest. You're going to pay that regardless if you file late and you are access to interest.
What kind of interest rate are we talking about? They charge 15%, or does it matter? Differ?
Yeah, it depends on the amount.
Okay.
So the interest rate it determines the amount that you owe in whatever bracket you is. Most of them is 20%. But it depends on the more it is, and that's the more high that the bracket is on the interest rate.
And that's just a terrible thing to happen if you don't file your taxes. And you would definitely want to give us a call before that happens. Again, the number is 321-282-1055. Attorney standing by right now who can help you with that problem. All right. I don't know if I'm on number 4, maybe 3, 4. Either way, you start getting notices from the IRS. And that's just super pesky. I mean, it's not like you're going to get one letter. Steve, is it like you get one letter and then that's it?
No, you're going to get more letters, plenty of letters until they get your attention. You'll keep getting letters and letters till eventually they're going to put a lien and levy on you.
Steve, it looks like we have a phone call right now.
We do. We have Dorothy on the line from Orlando. Hello, Dorothy. How are you?
All right, you?
We're fine. Thank you very much. It's Friday, and I understand you have a question for our guys tonight.
Hello, Dorothy.
Hello, Dorothy.
Hi. I need to know, my brother's deceased as of this week.
Oh, I'm sorry to hear that, Dorothy. I really am.
Thank you. He left a will. It states in the will that myself, my brother, and my sister was on the will. My brother and sister are deceased, and it states that if I'm the only one left, I get everything.
Uh-huh.
Okay.
He owes nobody. He owes one credit card bill of $250.
Okay.
He has a house, a car, bank accounts, IRA. Do I need to file this will in probate?
That's a very good question, Dorothy, and I think it's best we discuss this off the air. We don't want to give anyone private information. We don't want any of your private information to be disclosed over the. Oh, I'm sorry. Can you hear us, Dorothy?
Can you hear us, Dorothy?
Hello.
Oh, I think we're losing her.
I think we lost her cell phone. 407. Let me get her phone number for you.
Yeah, let's go ahead and get her number. And Dorothy, if you can hear us on the radio, we can definitely reach out to you, or you can call the law firm at any time. We definitely do probate and any kind of estate planning. Again, 321-282-1055. We can definitely help you with that will or some kind of probate that it sounds like you need to go through. So feel free to give us a call at any time.
Definitely have to.
Yeah, definitely. And I appreciate you calling us.
We get that problem often with cell phones where they can hear we can hear them, but they can't hear us.
Oh, okay.
It's a cell phone issue.
Well,
So we got Dorothy's information, and I'm sure somebody from the office will give her a call.
All right, yeah. We'll definitely be reaching out to her and to help her out with that problem.
By the way, if anybody else has any questions for our guests tonight, Attorney Brandon Stewart and also tax accountant Steve Richardson, we're basically talking about relationships with the IRS and tax issues and stuff like that. If you want to pose a question, call 407-916-5400. That's 407-916-5400. You're listening to the show You Have Power Behind the Law, and we're talking about taxes.
Yes, just a subject everyone loves to talk about. I mean, who doesn't love talking about taxes and IRS? I mean, really, let's just be real here. But I think what Steve and I were just talking about was you're going to get a certified letter from the IRS, and trust me, it's not going to be the only letter you get. It's not going to say, oh, well, I guess, John Smith just did, well, we couldn't get a hold of him, so we give up. No, that's not how it's going to work.
Well, first of all, before we move on, what's the content of the letter? What is it? What are they basics? Are they pretty business-like, or are they threatening, or what?
Well, the first content would be sort of threatening. It'll try to warn you that you need to file your taxes you haven't filed in a while. Then they'll send another letter giving you another warning. Then eventually they won't send a letter. They're going to automatically do a substitute filing, which is going to file at the highest rate that the IRS have.
Got it.
Then they'll send you another letter stating now, instead of you just not filing, you owe money now.
Yeah.
And people should be aware of the fact that there's a lot of IRS-type scams out there.
Right.
Where they call you on the phone and say you owe money and you got to give us your bank account number and all that.
Right.
Stay away from that. The IRS, as I understand, will only contact you via snail mail.
Right. And Steve, I'm sorry to interrupt. I would suggest once you get that letter, don't panic and definitely don't throw it in a drawer. bring it to myself or Mr. Steve Richardson here. He knows exactly what to do with this kind of thing. I mean, he's been doing this for so long now. I don't want to date you or anything like that or age you, but, he's been doing this for a very long time, and he wants to help you. I mean, I believe he just really wants to help you. I see him every day. I mean, he's a great guy, and he loves helping out clients who get these things in the mail. So please do not just throw this in the drawer and think, oh, when I have money, I'll take care of this. No, just please just bring it to us.
Okay.
All right.
Very good.
The next thing, and this is going to hit people hard right here. If you don't pay your taxes, you could forfeit your refund, as in the income tax that the government's withheld from you, and that you file for every year to get it back. I mean, the IRS might just hold it from you.
Right. In other words, what he was referring to is forfeiting your refund. Most people that don't file sometimes have a refund coming.
Got it.
So after a certain amount of years, in 3 years, you're not able to, you'll forfeit that refund, even if you decide to file after those 3 years. That's what I was talking about, substitute filing. If they substitute filing, see that you owe money, of course, they're not going to keep after you if they find out that you don't owe them any money. And they're definitely not going to tell you that they owe you any money. So they will forfeit that. And that way you'll lose that whole refund. You can't even get credit for it. And I know it has been happening a lot. And millions of people lose millions of money by forfeiting their refund by not filing when they should have filed.
And do you have ways to help these people who are dealing with this kind of thing, right?
Yes. They can go back 3 years. Like I say, they do give you up to 3 years to file your taxes. Now, if the good thing about it, if you forfeited your refund, and let's say now you got a great job, making more money than you made before, but it's 5 years down the road, but you owe money now. So what they can do, you can go back and file the one that you forfeited the refund on. They can apply that credit to that refund, the money that you owe now, even though you owed it then. Now, they can't give you money back, but they can apply it to your credit. Most times they will. It depends on the agent and who RO that we would speak.
But then you still have penalties and interests and all that piling up on you.
Right.
So don't let it slide, in other words.
Right. Don't let it slide. You do want to take care of it.
Okay, and here's the next thing on this dreadful list of not paying your taxes, which I didn't even know could happen. Steve, I mean, I'm sure you knew this could happen. Apparently, you can give up your Social Security.
Yes.
You knew about this.
Right.
I did not.
Right.
So if you could maybe elaborate a little bit about that.
Well, what that is, you give up your Social Security is what's called the Federal Payment Levy Program.
Right.
The IRS has the ability to attack certain assets after going through their profit notification process.
Right.
What those assets is, Social Security is part of your asset. So they can take that Social Security away from you.
Wow.
Even with if you was in the service for a long time and you was getting disability from the service, they can also reach in and take your disability.
Is that right?
Service too.
Wow.
Yes, they can.
That's harsh. Like I said, it's a collection agent or a debt collector on steroids right there. It's a good example.
Yeah.
You touch your Social Security.
Absolutely.
That's something I just didn't think could be touched. So the next thing here, and this is actually probably a real common thing that Steve deals with, and we see a lot at the firm, is if you fail to pay your taxes, you could receive what's called a federal tax lien. And Steve, maybe you want to elaborate a little bit more of what a federal tax lien is?
Yeah, a federal tax lien, they'll put a lien on your property, bank account, assets, whatever you may have, they can go ahead and put a lien on that, which we will be getting in a little later on in this radio show about liens and levies. But they definitely, if you have any questions about the difference between levy and liens, I can explain that. But the main thing right now, yes, they could put a lien on your property or, like I say, or your assets. Now, a lien is different. In other words, liquidated. In other words, if they put a lien on something, which you know of a lien, if you ever bought a car, most people don't pay cash for cars.
Right.
So you have the dealer or the lien, you have someone that has a lien on it, and you don't get actually that title until that car is paid for.
Gosh.
Correct.
So once they put that lien on your property, even on your bank account, that means you have no access to it or you don't have full access to it because they have to have that property first. So if you wanted to sell your house, if you got a lien, you can't sell it now because the IRS have possession of that house.
Yikes.
Wow.
And again, if you're just tuning in, my name is Brandon Stewart. I'm an attorney with attorneys Justin Clark and Associates, here with my tax accountant who works for the firm, Mr. Stephen Richardson, and as always, Mr. Tom Benson. And if you want to give us a call, the number to the station here is 407-916-5400, toll free 855-545-1025. We have attorneys standing by right now. you have any kind of IRS problem, or any kind of tax problem, please call us 321-282-1055.
That would be the office in case you did not want to call the station.
Absolutely. In case you want to keep this confidential, like, you might not want to call right now and tell us about the 10 years of tax returns that you haven't filed on air.
Well, generally people just give us their first name, and that's as far as it goes. No one really knows who they are.
Yeah, definitely. Yes. If you want to keep it a private conversation, please call the office.
Yeah.
All right. Next on this list of terrible things that can happen if you don't pay your taxes. And I think I knew about this one, but I'm not too sure. Apparently, you can lose ground on your credit report. In other words, it'll show up on your credit report.
Right. Yes. If you owe the government any kind of taxes, if they have excess that you do owe taxes, let's say now this is if you already filed. So if you filed and they determine that you do owe taxes, then yes, it can show up on your credit report, especially if they put a lien on your property of some sort. That shows up, and that does hurt your credit score.
And if you have a lien, how quickly can you get rid of it? Because that just complicates your life for real big time.
I know it's not an easy process. I know that much.
Right. It takes a while to get a lien. That's definitely you don't want to get a lien put on anything. But if you do, we definitely can help with that and get it removed as quickly as possible.
Yeah, I've seen Steve do this day in and day out. I've seen him remove liens like it was nothing. He's a lien removal ninja, as I like to say. I mean, it's crazy watching him work like that.
Well, to the average person, it sounds very intimidating to get a lien or a levy put on you. But Steve probably runs into this stuff every day.
Oh, yeah, definitely.
Yes. I run into this a lot with different properties. When people trying to short sell their property or they want to do an investment sale and they're not able to do it because it's a lien. So I have to go in and remove the lien, get with the IRS, serve certain documents. Now, normally that process, they don't even look at them until 6 months. On some cases, if by knowing the IRS, I get in and I get to a certain ROA agent or agent there with the revenue officer, I'm able to, they'll sometimes move faster than what they normally move. Not just saying that, but that really has happened at times. But they normally don't touch it until even 6 months if you're filing a different form, which would be a release of lien form. There's different ways to do it.
And that's exactly why you should call an attorney like ourselves, because Mr. Richardson here, Steve here, he can talk to the IRS real quick. I mean, he knows how to do it. I know when the average citizen tries to call the IRS, I mean, they put him on hold for who knows how long.
Sure.
And, Steve's got numbers. He knows to call. He knows who to talk to. I mean, he can get talking to a live person probably a lot faster than the average person can.
Yeah. Definitely.
And that's why it's really important if you're facing some kind of federal tax lien, you please call the office. 321-282-1055. We have attorneys standing by right now who can help you, and we can help with your tax issues. All right. So you can lose ground on your credit report. We just talked about that. It's a pretty bad thing. The next thing, this is probably what the IRS is absolutely known for right here. Having your property seized. Do you guys know the IRS could do that?
Oh, sure.
Did you know that?
Yeah.
And it's called what's called a levy, and they could take pretty much anything from you. I would, cars, and most importantly, what people really forget about is they can take money out of your account. And Steve, I mean, I know you deal with this. This is the one you really deal with all the time.
Now, can they do that without notifying you, or they say we are now going to do this and they do it?
No, they don't notify you at all.
Wow.
You'll be asleep. Next morning you wake up, your car gone.
Wow.
Or you try to go get money out the bank, you at the restaurant, and you done took a lady out to eat, and
there it
you
goes.
think you're going to pay for it, and then next thing your credit card frozen.
Oh, my
bank
gosh.
account frozen.
They don't typically give you notice beforehand?
No, not when they're doing lien. After they done sent you all the notices, they figure that you're going to ignore the next notice. So why keep sending notice and wasting papers since you haven't listened to them the first few times?
Oh my gosh!
But so that's one of the things I was going to get into is the difference between a levy and a lien.
Yeah, please tell us what the difference between a levy and a federal tax lien is, so our listeners can kind of understand better.
Yeah, Brandon did go into it real good to understand that the lien is something that the access that they put a lien on, which says you still have your property, but it still belongs to somebody else.
Right.
A levy, once he said, seize your property, that means you don't even own that property no more.
Oh,
so
my
you
gosh.
have access. They takes that from you. That is a seizure. In other words, they could take your property. Once it gets to that point, they can take your bank account. They'll come in with a levy if they feel like that money is owed. And if you got it a trust, or if you have big money came in, they can't take that money from you.
So, in other words, a lien you keep your property or money or whatever, but they just freeze it more or less. But with a levy, you lose out on it.
Yeah, with a levy, they take it.
Wow.
They come in and take it or take your account. A lot of people don't know, but there is a hope because there are ways that a levy can be removed.
Oh, okay.
If they do levy your property. When they levy and take it, that don't mean that it's just there and not lost all is gone. If they come and take your car, that don't mean you can't ever get your car back.
And you know how to do that, right?
Right.
Okay.
There are certain ways that you can do that.
And that's why you need to call the office, 321-282-1055, in case you are having any kind of levy issue or any kind of property is being seized. You can call the office, speak to myself, speak to Steve Richardson here. And, I mean, he knows what to do in that situation, and he can help you out for sure. All right. Next thing here on this list of terrible things. I mean, this is just depressing me. I don't know about you guys, but the more I read this list, the more depressed I get, honestly. It's just like, how much more can they possibly do?
Sure.
I mean, geez.
Yeah.
Have you ever heard of a debt collector who's able just to flat out take money out of your account? Never, right?
Yeah. No, just the IRS.
Just the IRS.
Yeah.
Because they're on steroids, like I like to say.
Mm-hmm.
So the next thing here is, and I'm sure Steve's dealt with this before, is you might receive a summons from the IRS pretty much telling you to appear to meet with an IRS officer. That's probably really scary. What's that like, Steve?
Right. That's what I was referring to as a ROA. That's called a revenue officer.
Oh, my gosh.
Once they assign you to an RO officer after giving you so many times, that means it has gotten real crucial.
Wow.
That is now to take steps that can be more than just civil action. It can become a legal action then as a criminal action.
Mm-hmm. Mm-hmm.
So once you get signed that revenue officer, that means you really need to call us.
How quickly after you get an IRS notification that you've got a problem, do you run into that? I mean, how do you have time? How much time do you have to clean up your mess before you get a summons?
Well, before they give you time. It depends on how fast it is that they find you, how much money you owe to the IRS, and the statute of how long you have been running from the IRS. But you do have time, but you need to move quick. Once they start on you, you definitely need to take care of it. Because once it gets to that point with an ROA, you definitely need a representative.
Okay.
Right. Okay. And here's another terrible thing on this list that the IRS can do. And I mean, this is actually really extreme. And I don't want anyone to think that this might happen, but obviously you could serve some jail time, but it would have to be something to the point where you're fraudulently reporting, tax or reporting income, and you probably also have to be a kind of a high roller before something like that could happen, where you'd actually have to serve time in jail. But Steve, have you ever seen anything like that?
Yeah, of course. That's just like fraud, especially like identity fraud. People go to jail for identity fraud.
Right.
So even for you not paying taxes or using a name, you definitely can go to jail for it. A lot of people think that they won't go to jail because it's just, hey, I just haven't paid my taxes. So take it for granted that you can. But like you said, it's in extreme cases, but don't think that it can't happen to you if you keep ignoring it and thinking it's just going to go away. I could ignore it, and they've been telling me for years, just like people say Jesus coming back. They've been saying that for years, and some people ignore it. But you can't keep ignoring the fact that you owe the IRS, and sooner or later it's going to catch up to you.
Right.
So it's better to do it sooner than do it later.
Right. Now, you normally work on several cases, I'm sure, at one time. How many different cases do you handle at a time?
Well, for instance, I handle multiple cases at one time. Actually, at the current time, I'm handling like 23 cases at one time I'm dealing with.
And what's the time length on them? I mean, how quickly can you settle? Does some of them drag on for a longer time? Or
yes, sometime as longer. It depends on the case. Like you said, that's a great question. Because I deal with multiple. Since I have multiple cases, of course, I have multiple revenue officers, which are ROAs. So I have to speak with them and see. Some of them I have to try to get extension with to get time to get the material together on the documents that I need to file in for my my customers.
Okay.
But thank God that we're able to get that done and taken care of in a timely manner because of the tools that I have that access to in front of me that I have and I use with the IRS and with my clients. That I can work with them on working with me where they don't even have to no more talk to the IRS, deal with the IRS. I take care of everything from them, and they help assist me along on getting the things that I need to prepare and get them ready for the IRS. And all of the cases so far I've done, I can see 100% I came out on top on helping my clients.
And Steve, what is the benefit of having someone like you deal with the IRS as opposed to the actual taxpayer themselves?
Money.
Yeah.
In other words, it saves you a lot of money.
Okay.
Dealing with someone like me, it'll save you multiple lot of money. Now, you have other places out there that tax resolutions, tax this, tax that, which is, but be very careful, too, when choosing someone, especially if they're out of Chicago, they're out of different places. The reason why I say that, you have a lot of them that says that they'll do this and that for you.
Right.
And, Brandon, you know on the case of third-party people, they don't do what they say they're going to do, and you still done paid them their money, and you're still stuck owing this money to the IRS.
Right.
So it's great to have an attorney firm or something like that case backing you.
Mm-hmm.
You're listening to You Have Power Behind the Law with attorney Justin Clark and Associates. Justin is not with us tonight. Instead, we have attorney Brandon Stewart and also tax accountant Steve Richardson. We're talking IRS issues and tax liens and things like that. And we got a short break coming up. We'll be back in about 5 minutes here on YouHavePower.com.
Okay, guys.
See you guys in a little bit.
You're listening to You Have Power Behind the Law with attorney Justin Clark. For personalized help with your legal issues, visit youhavepower.com or call 321-282-1055. Now, back in studio with more expert legal advice, here's Justin Clark.
Welcome back, everybody. This is Tom Benson. Justin is not with us tonight. He is off traveling somewhere or in court or whatever.
Oh, yeah.
But also from the law office of Justin Clark and Associates, we have two stand-ins tonight. We have attorney Brandon Stewart and also tax accountant Steve Richardson. We've been talking about tax liens and things that deal with the IRS. We want to remind you that if you have a question for them this evening, call them at 407-916-5400. That's 407-916-5400. And, of course, if you don't want to call the radio station but you still have some questions, you can call the law office itself. Justin Clark and Associates, their number is 321-282-1055. That's 321-282-1055. Welcome back, guys.
Hey, good to see you, Tom.
Good to see you.
And Tom, I think I've done the radio show enough times now. I mean, is there any way to have Behind the Law with Brandon Stewart when I'm on it? There's Justin Clark trademark now. I mean, no way to have that.
Sure, we can do it. I don't know.
Dub it over.
I don't know if Justin would like it. You know what he'll probably say is you pay the tab.
Oh, okay. I'll spot it if I can just have my name dubbed in for whenever I'm on the show. I'm just kidding, Justin. If you're listening, I know he's probably not happy.
Maybe next time I should say, welcome back to the show. Sitting in for Brandon Stewart tonight is Justin Clark.
Yeah, please do that. I would love to hear that. It would make me laugh really hard if you could do that.
All right. So where do we go from here, guys?
All right. So we talked about an ultra depressing subject and terrible things that could happen to you or what the IRS can do to you if you don't pay your taxes. So let's just start. Let's just talk about regular tax assessments at this point. And Steve, could you let our viewers kind of know exactly what is a tax assessment?
Okay. Yes, that's a good question. Now that we talked, like you say, about all the problems you have when you don't pay your taxes, do your taxes. Now, if you have gotten yourself in trouble and you want one of those ones that want to get yourself out of trouble, there is hope. So we're going to talk about tax assessment. In other words,
do you mind explaining exactly what that is to them? What is a tax assessment?
A tax assessment is just like when you're doing an assessment of your taxes.
Right.
In other words, make an agreement or trying to resolve your tax issue.
Oh, okay.
So they're doing an assessment on your taxes. So it's called a tax assessment.
So what are some appropriate options then in order to resolve these exact tax assessments?
Okay, you have different options now, which you didn't have before actually in the past. So that's a good thing.
Okay.
You have the installment agreement, the partial payment installment agreement, or you have an offer in compromise.
You have to let us know what each one is, please. What is this installment agreement thing? I mean, is exactly what it sounds like?
Yes, exactly. Just like you have a car installment agreement, you have installment agreement.
Okay.
But let's go. For instance, the IRS implemented additional payment option. Like I said, they added in a new payment option.
Right.
Which, I think it was back in 2005, January 17th, if I'm not mistaken.
Oh, wow.
Somewhere back in there. Known as the partial payment installment agreement. Now, this is the PPIA.
Okay.
Which is not an installment agreement. It's a difference between an installment agreement and a partial payment installment agreement, which I will get to.
Okay.
For taxpayers who have outstanding federal tax liability, this new payment option became possible with the passage of the American Job Creation Act that they had implemented in law in October 22nd in that year or the year before that. But anyway, the new litigations included language amending Internal Revenue which allow the IRS to enter into installment agreements that result in a full or partial payment of the tax liability.
So what does that mean exactly, partial payment?
Okay, a partial payment of your liability. What that is, instead of making a full payment, you make a partial payment. There is some cons to it, and then there are some opposing to making partial payments on the loan. But for taxpayers unable to pay the full assessment, the partial payment agreement is available, as well as the offering compromise.
So in other words, if you owe $20,000 and you make a partial payment of, say, $5,000, that gets them off your back for a while, but it doesn't forgive the remainder of what you owe them?
No. Okay. That's a good question. Now you're referring to almost an offering compromise when you're paying a lump sum.
Right.
A partial payment installment, not partial payment to the whole liability, but a partial payment installment is when you're paying partially on an installment agreement, when you can't afford that agreement. So there's a little difference between that. In other words, the partial payment installment agreement allow you to pay what you could afford to pay of your tax assessment and installment payments. For your application to be considered, though, the IRS will need to file a Form 9465 for the installment.
Oh, boy.
But there is a little difference between actual installment agreement
and the
partial payment.
So in other words, if you can't, so what it sounds like is the IRS will give you an installment agreement. However, if you can't afford that, you can elect to do a partial payment installment agreement. Right.
Now, but I want you to keep in mind, if you do, the biggest drawback to that, it has opened the door, because of the policy and the codes that they have. The PPIA is be reviewed every 2 years. See, they review that every 2 years, which has an offer compromise is over.
So a change in income, maybe? Is that what they're looking for?
Exactly. What they'll do is review every 2 years, just like if you was on the uncollectible.
Right.
In other words, unable to collect, where you couldn't pay none of which has happened, that you got to a point where you got fired, lost your job, and just can't afford to pay that tax penalty. They won't just take it away, but they'll put you as on the uncollectible.
Got it.
So the partial payment agreement, installment agreement, that's just like that. But that's the uncollectible. They review every year.
Okay.
The partial payment they review every 2 years. That's the drawback to it. If they find out that, now you're making a whole lot more, or you got a boat, or your parents, someone passed away and left you inheritance.
We have to make an adjustment here.
Sneaky
they
IRS.
Make that adjustment, then they could go back and take all of what you owe.
Oh, boy. Yikes.
So that's a big setback on that, which is an offering compromise. They won't go back and they won't take that.
Do you want to talk about penalty abatements, or do you want to talk about offering compromise right now? Which one do you want to explain to the viewers?
Well, we can talk about penalty abatement.
All right, so my understanding, and correct me if I'm wrong, because obviously you're way more educated in this tax stuff than I am. You can get that installment agreement, but you can also get a penalty abatement with that installment agreement, if I'm not mistaken.
Yes, you definitely can. A lot of people, when they first do it, amateurs, I would say, the first thing they go for, because you get a first-time penalty abatement. Automatically, you normally qualify, if it's within that limit, that time limit, that you file, you qualify automatically for a penalty first time.
What exactly is an abatement? What does that mean? That
it abates the penalty. In other words, you're going for an abatement. In other words, the penalty allows you, IRS, okay, I messed up, I forgot, or I didn't know to pay my taxes at this time, or something, I got crowded. So they allow you on that penalty abatement that one time. But if you have an installment agreement,
right,
I wouldn't pay that. I wouldn't even apply for that penalty abatement at that time. Now, if I do it offering compromise, or if I do pay all my taxes off, then I go for the penalty abatement, because then you'll get all of that penalty back. In other words, if you make an installment agreement, and let's say, okay, I want this first time abatement. Well, now that you made an installment agreement, your abatement is $600. So they're going to give you that credit for $600 and make that installment agreement. But then guess what? The very next day, that penalty started accruing again, because it doesn't stop until that tax loan is satisfied, or that tax debt or assessment is satisfied.
Sure.
So if you wait till the end, then they'll go back and give you credit for all that, because by the time it accrued, since you didn't use it the first time, it may be up by the time you through paying it off in a year or two, maybe up to $5,000. Then you get all that $5,000 back instead of that $600.
Would you do an abatement first and then an installment agreement, or vice versa?
No, you want to do the installment agreement and pay it off first.
Okay.
Before even doing abatement.
Before you do the abatement.
Yeah.
Okay.
Now, it depends on the circumstance. Let me take that back. Let me back my word back.
Okay.
Now, if depends on what abatement you're going for. Penalty abatement, that's for the first time a penalty abatement. Now, if you had a serious incident that happened that caused you not to be able to pay that, like a death in the family, hospitalized,
loss of job, maybe.
Right, loss of job,
income,
then you go for a hardship abatement or some type of like that penalty abatement.
Okay,
which you can use that right away. You don't have to wait on that first time.
And if you're listening right now, we're talking. This is Attorney Brandon Stewart speaking, standing in for Attorney Justin Clark. I mean, this is his show. It's Behind the Law with Justin Clark. Here with our tax accountant, Mr. Steve Richardson, and as always, Mr. Tom Benson. If you want to visit our website, it's www.youhavepower.com, as Justin likes to say, youhavepower.com. My best Justin Clark impression right there, ladies and gentlemen. If you want to call the office, 321-282-1055. Again, 321-282-1055. We have attorneys standing by all the time. We're here to help you with your tax problems. If you've been listening, you've heard Mr. Richardson. I mean, he knows everything about this stuff. I mean, he knows about abatements. He knows about installment agreements. I mean, he can help you with these tax problems, and he really wants to. And this is what he does, and he's always doing that. And so, Steve, you were about to tell us about this magic. Is it a magical thing called an offer in compromise? Do you think it's a good thing, or what are your views on this? Could you explain to everyone exactly what an offer in compromise is and your views on this?
Yes, offer in compromise. That's when you're making an offer. Excuse me. My fans, but okay, that's when you're making an offer. Offer in compromise is, let's say, if you found a way somehow you came upon some money. Let's say you got behind in your debt, but then now a family member passed. Let's not use that incident, but you just came behind. You won the lotto.
Okay.
Okay. Let's say you won the lotto.
Yippee.
So instead of giving all your money to the IRS you owe, you want to do an offer in compromise.
Well, of course.
So what you want to do, you'll present, you fill out a certain paperwork to see if you qualify for offer in compromise. There's different steps you have to take. First of all, you must be in compliance. In other words, you have to have all of your taxes filed, be up to date. Now, of course, you owe taxes, so you're not going to be up to date owing, but with the filing, you want to be up to date with all your filings. And then they'll go by your income, what you're making, and see what you have left and say, okay, I want to do an offer compromise. I owe the IRS right now. I've had clients owing over $200,000, but we lose one on a little bit less than that. We lose $123,000.
Okay.
So let's say you owe the IRS $123,000.
Yikes! Not a position you want to be in.
This is something. Yes, man. Look here. I'm gonna do an offer. I got this much money. They'll look and see what you can do and do. Now, while they're offering a compromise, it's going to take at least a year for that offer and compromise to be approved.
Really?
So through that process, you want to go ahead and do an installment agreement to keep paying on that. But the good thing is, once it do get approved, more than likely it will get approved, especially if you let Justin Clark and Associates do it.
Right.
But once it do get approved, they'll take what you've been paying towards that with that. That way it wasn't like you just paying that for nothing.
And they want to see that you have a kind of a large amount in your bank account in order to do this offer in compromise. Is that what they want to see? Like they don't want to see you with, a minimum amount of money?
They want to see if you can afford it. It depends on what your offer is.
Right.
Now, most offer compromises, you want to put 20% down.
Okay.
You want to put, let's say, all right, I owe $123,000.
Right.
I want to get this off my shoulder, my back. I'm just paying $20,000, and I want it over with. Just get it over with.
Right.
So you say you owe $123,000, but you say I'll pay you $20,000, and they may accept that.
Right. That's called an offer in compromise.
Got it.
But then that 20, you have to have that up front. Let's say 20% of 20 was that $4,000.
I'm in law, not in mathematics. Yeah. I wish I could help you out there. I really do.
Yeah. So what you do, you pay that amount up front. Then you'll say, well, I want to put 20. What I do, but you pay that. Then we'll put in the information, and we'll see. But before even we do an offer in compromise, I'll already know with the IRS if it's going to be acceptable for you to do an offer in compromise, what that offer be, what they will accept. I know exactly what they will accept.
And that's the advantages of hiring someone like you to do, correct?
Then just going in and saying, oh, you could get this and getting you all happy and shook up and thinking this, and then all of a sudden you get shot down.
Right.
So I definitely say, no, that's not a good offer. I think we should offer from this or we should offer from that. I'll let you know what you should offer from and what's best to offer and what they will accept.
And go ahead, Tom. Sorry.
Now, do you know that based on past cases, or do you know that based on what you have had conversations with the IRS about?
A little of both, but the main thing, the software.
Software, huh?
Oh, beautiful.
Yes, we have the greatest tools. That's what I call tools.
Okay.
It's a tools calculation, just like when you're adding 2 + 2. That calculator going to tell you it's 4 all the time.
Right.
Yeah.
So when I put the information into my software, it's going to tell me exactly what I need.
Oh, you can't tell them your secret, Steve. Now they know. Now they're going to find the software. I mean, Steve, what
you got to know how to use the software.
Right, and I was just about to ask you, what's the advantage? Can the average taxpayer just try their own offering compromise? And if they do, I mean, is it more advantageous than using someone like you or our firm to do it?
They can. Anybody can do it.
Right.
I mean, anyone can get up and do offering compromise, but I fees you not to without being represented. Most likely you spent all that time, spent all that money, and if your T's not crossed and your I's not dotted, they're not going to approve you. Just like going to a loan for a bank to get a house mortgage on a house. If you're not, it's not going to happen if you don't have your T's.
What are your views on offering compromise? Do you suggest it, or is it just is it just a good situation for the right person?
Right.
It just depends on everyone's situation.
It depends on the situation. And I definitely agree with it. It depends on the person who is good. Some people offering compromise is great for.
Right.
Other ones it's not great for. The ones that really most people it's not great for, to be honest with you.
Okay.
Unless you're making a lot of money and just something happened at that point of time. Now you're back on top. Let's say you had a restaurant that was cooking. And, we can use the real estate market, for instance. If you was a real estate agent, the real estate was all good at one time, and all of a sudden it took a dive. You
right.
Look at the stock market
in 2008. Yeah, okay.
It took a dive.
Yeah. Yep.
So now you owing all these taxes, but now real estate coming back. Now you got a little money in your pocket. You can save it back. Okay, hey, now I'm back on top. I can do this and that. That's the ones that'll make an offering compromise.
Okay, I see what you're saying. And so that's the difference, I think, with our firm and someone like Steve is he takes everyone's story and everyone's situation into account. He doesn't do the same thing for every single person. I mean, he's going to look at your situation, decide what's best for you. I mean, he's very experienced in this. And again, if you need any kind of IRS or any kind of tax help, I mean, we have a tax accountant with the firm. I mean, how many firms have their own tax accountant? I mean, I don't know. But we have that, and we have that for you, because we want to make sure that you get the best care for your IRS. I mean, we know it's no joke when the IRS is sending you letters. It's not a joke. It's not fun. It's really scary for a lot of people. I mean, people stay up. I mean, I'm sure, Steve, I'm sure a lot of the clients from our office that you speak with have, terrible anxiety. And
yes,
I mean,
they do.
And I've heard, and Justin says this all the time. Can they take your passport now when it comes to this stuff? I mean, that's Justin harps on that.
They actually, even with like child support, yes. If you're not up to date now, they actually passed that law that they can stop you from getting a passport. They can't take the one if you already have one, but they can stop you and prolong you from getting a passport. And like you say, they are a lot of people come to me now, and I tell them to calm down. That they be worried, man.
Right.
I'm going to jail or something's going to happen.
Yeah.
And I owe this. I don't know why I didn't file. Because sometimes you got to look at the taxpayer. Because sometimes it's not the taxpayer's fault. They either had bad advice, or in one case I have someone that I'm working on now. They hired a CPA that was
I know about this one.
doing their work, and they hadn't filed for them since 2008, and they brought me all of the returns that they have, so they thought they was getting their returns filed because they have the copies, but they didn't file them for them, which put them in a big hole, and it wasn't even their fault, and they're scared about this with the jobs, the businesses. So there's sometimes it just ain't the taxpayer fault themselves. They just didn't know, or
they trusted somebody.
Trusted somebody else.
And it's not easy to do by yourself, and that's why it happens. And I want everyone else to also realize that, I mean, you don't just have to have IRS problems. I mean, if you just want to file your taxes, we'll do that for you as well. Steve can do that, any day of the week. He'll file your he can just file your taxes. I mean, any kind of tax problem whatsoever, any kind of tax need, please just call the office anytime, 321-282-1055. We have attorneys standing by all the time to help you. And Steve, can I give your email address out for everyone if they want? If maybe they want to email you privately, you can email Steve privately at Richardson, so RICHARDSON. I hope I spelled that right. Yep. At YouHavePower, so YOUHavePower.com. That's Steve's work personal email. And I mean, if you don't want to call, I mean, maybe you don't even want to talk on. I mean, if you don't even want to talk on the phone, please just email him any problem that you have. I mean, it's really important. Please don't ignore it. That's all I can say.
And the last thing I want to say, too, is for exactly when he was saying about, we do taxes. And the thing about using us for doing taxes is you get the right credit and deductions that you deserve.
Oh, yeah.
You miss out on a whole lot of money when you do not get the money that you deserve by not filing.
Let me ask you, Steve, other than not filing or filing late and all that, what's the most common infraction people do that gets them in trouble?
Not reporting all of their income.
Oh,
one
who would
of
have
the
thought?
most common things is
Who would have thought?
And this is a market that's big on hospitality, and a lot of waitresses and waiters probably don't pay declare all their tips.
Right.
Mm-hmm.
Yeah, people don't pay their tips. You have 1099s, and you have some that they work multiple jobs during the year. A W-2 don't come in, so they don't report that W-2. And they forgot about that. They worked at that job or whatever. That's another reporting. And then you have a lot of the non-reporting income. A lot of cases I've seen the 1099-C.
Right.
That's the cancellation of debt. You'd have to report that. A lot of people, they get in the mail, they ignore it, don't think that that's a cancellation. That's income. In other words, if it was someone that you brought a car from and they repossessed the car, now you have that 1099-C where they forgave that debt to you. That's
or
called
a short
income.
Sale. Or a short sale.
Or a short sale.
We get, especially at our firm, a lot of our clients get 1099s
so
after
don't
short
take that
sales.
lightly.
Okay.
Okay, we got a couple of minutes left. Let's wrap it up. What's the best advice you could give?
The best advice I can give, come see attorneys Justin Clark and Associates.
Yes, sir.
And see Stephen Richardson for your taxes and your tax issues.
And
well said.
Yeah, and this is Steve's definitely a great guy. I mean, he works very, very hard, and I'm not just trying to, puff it up here. I mean, I see him every day, in the office, and I know he's working hard. And sometimes I don't see him because he's working so hard. I mean, clients, they love him, and he does a great, great service for everybody. I mean, he does my taxes. I mean, why not? I trust him. He's a good guy.
Thank you for that. Thank you.
Well, you've been listening to YouHavePower.com, Behind the Law, show from Justin Clark and Associates. Justin's not in tonight. We've been speaking with attorney Brandon Stewart.
Yes, sir.
And also tax accountant Steve Richardson.
Yes, sir.
If you ever get that desperate letter from the IRS that they want to talk to you, young man.
No, we'll talk to them instead.
The best thing to do is call Justin Clark and Associates. They're at 321-282-1055. That's 321-282-1055 for Justin Clark and Associates. We'll catch you next week, every Friday night from 6 to 7, right here on WFLA.
Good night, everybody.
Have a safe trip home.
Thanks for listening to You Have Power Behind the Law with attorney Justin Clark from the law firm Justin Clark and Associates. For personalized help with your legal challenges, visit youhavepower.com and tune in every Friday at 6 p.m. for more expert answers to your legal questions here on News Radio 102.5 WFLA.